and participants in today's webinar, which is based on the topic Important Points to Consider for Closing of Accounts with Respect to GST. Today's webinar is being organized by DGTS Delhi Zonal Unit and Kolkata Zonal Unit. I am Sailendra Kumar, Assistant Director, DGTS DZO, and I will be the moderator for today's session. At the onset of the webinar, I would like to invite Sri Amish Kumar Gupta sir, who is an Indian Revenue Service Officer of the batch 2002 and is currently serving the department as the Additional Director General, DGTS, DZO, and KZDU. Sir has a dynamic personality and a vast experience of serving in various formations in Delhi NCR and Gujarat zone. Sir has also worked in board office and has worked in almost all areas of the department, which are excise, customs, and the GST. Sir.
Very warm good afternoon to everybody. Actually, warm is the right word because as Mr. Bimal Jain must be knowing, in this part of the country it's getting really warm. So first of all, I'd like to welcome all of you, the delegates that are attending this webinar, and the panelists, and obviously our resource person, and obviously Bimal Jain. Mr. Bimal Jain has always been there. He's always been present, to help us in hand-holding the taxpayer. From the side, this webinar is being organized from the side of DGTS KZU and DZU. This time I'm mentioning KZU first because this time is the initiative of the Kolkata Zonal Unit of our zone of Directorate of Taxpayer Services. Mr. Indranil, our ED, is there. He has taken personal interest in organizing this webinar, and I wholeheartedly welcome all of you here. As you all know, GST for so many years has been almost settled now, and still we find that being a law which was amended law had come into being, a lot of laws got into merged into it. It's a much more easier law and much more easier in procedures and all, but still because of the time gap and people were aware of the earlier laws much more. Because of that law is continuing for a long time. This law has come into some 6-7 years only. Still, I find that a lot of people are not aware of the provisions as well as the documentation to be maintained. It's an ongoing process, and it is getting settled now. As Mr. Tarun mentioned, that SMEs and especially the MSMEs and SMEs, these are the people who are just coming to this. Taxation arena because of decrease of the requirement of earlier there was the turnover required was a little more, now the turnover required a little less for the filing of returns and all those things. So many of these people are not aware. Many of them are uneducated also. As the country is growing and the country is getting developed, more and more people are coming into business, and even illiterate people are into these things. So it is our duty to let the people know that what are the requirements and these things. The earlier the laws used to be that earlier everything was told by the government, and everything have to be filed with the government, and everything has to be done. The calculation was done by the government, and that type of thing was there. Now this in the new paradigm from the last so many 20, 25 years, the new paradigm is that we give trust on the SSE itself. As the number of SSEs increase, it's very necessary that to place more and more trust on the people who are our SSEs, so that they only themselves come forward and they declare it properly, and they try to file the returns properly, pay the tax, and contribute to the growth of the country. Coming to the topic which has been selected today regarding closing accounts, very apt time for this type of informative webinar, because just now the financial year has ended, and now the accounts will be closed in the next few months by the taxpayers as well as the chartered accountants. Very important point to mention that chartered accountants are a very important partners of our department, because these are the people who are who need to inform the SSE, inform the people that what are the documentation required to be maintained, what are the provisions are there, and where your not doing your things properly, because ultimately which the department doesn't want is that in future some issues come. As Mr. Bimal Jain is aware, I was been into audit for many years, so I have a very ringside view of this matter of accounts. And we find that, in most of the cases, almost more than 50, I would say about 70% cases, the SSCs are themselves, very keen to file it properly and, deposit the taxes properly. Most of the 70% of the issues which come forward are because of lack of knowledge. It is not because the people are themselves, they want to do some hanky-panky or file the return wrongly and pay their taxes wrongly. Most of them are not aware. 30% always there are some people, there was 10% are always the black sheeps are there. So you cannot do anything about them. Therefore, then departments enforcement handle is there. They look into that. But with my experience in audit, I find that it's very necessary that you teach the taxpayer, you tell them what is required, what is not, what you have done wrongly this time. Please don't do it next time. So chartered accountants are very important partners in this, because they have been auditing accounts of people. They have been helping them file their returns. They are aware that what are the issues which can come into the crosshairs of the department. As you all know that after filing your returns for the particular year, there's always a chance to correct all the mistakes in the final return. In the annual return you file GST 9. So obviously it's a very apt time. So to go through all of whatever your returns, different type of returns, different returns of other departments, 26 AS and all those things, and go through it properly by closing accounts and correct the mistakes before that final return is there. So that ultimately when the return is filed, we go by the final return, annual return, that if there's a mistake there, then only this is the point. I've gone into detail of the presentation prepared by Mr. Tarun Gupta. Is a very young and dynamic of a person. I can see from here. I've not interacted with him, but going from the feedback of Mr. Indranil, I find that he's well received there. He's giving lectures in Larsen also there, and he is a known personality there. So I've gone into his presentation and find that it is very detailed and it's covered almost all the points. Whatever I'm aware, obviously with little background of audit I have. So right from the legal provisions to consequence of non-maintenance, FAQs, and what are the different types of, what are the mismatch which are found in different returns, and what are the how many years you have to maintain the data. Because it is in your own interest to keep the data for last 6 years with yourself. Why? Because ultimately, if it is not there, then department can resort to burst judgment assessment, which also the department doesn't want. But for completion proceeding, they have to rely on that, which obviously is will be very not good for both the department as well as the assessee. It's covered all the important aspects and a different type of returns which have been filed, and what are the issues which you have to keep in mind. So we'll keep the recording of this presentation. It will be available on your YouTube channel. It will be available on the CBIC channel also, on the WhatsApp, and we'll be making snippets of this webinar also, so that particular issue, if somebody wants to see, they can click on it and see. So from our side, this is a very good initiative. We are very apt at the time. So with those words, I'll request all of you to take benefit of this webinar. And thank you again to our partner, CII, Mr. Bimal Jain, specifically I'll thank, and our resource person, Mr. Tarun. So, Shailendra, you can continue this.
Thank you, sir, for such encouraging words. I am happy to share that today we have with us Sri Bimal Jain, who is a member of Indirect Tax Committee at the Federation of Indian Chambers of Commerce and Industry and the Associated Chambers of Commerce and Industry of India. Sri Bimal has a wide experience in working with various renowned companies and has vast experience in the matters of taxation and indirect tax policy. He has also been associated with various advisory committees on matters related to indirect taxation. Now I would invite Sri Bimal Jain for sharing with us his views on today's topic.
At the outset, let me thank Amish sir, who is ADG DGTS taking this initiative, and whole team of DGTS, Sri Salendra Kumarji, Sri Indranil ji from Kolkata, and today's keynote speaker, technical speaker, Sri Tarun Kumar Gupta ji, and all the trade members and tax professionals. The topic for the day is very important. We are going to discuss important compliances for closing books of account from GST perspective. And it is rightly being picked up by ADG sir that if compliances are being done, then there would be less hassle for the taxpayer and tax professionals. So it is important that we are complying with the law on timely basis. It is important handholding for SME and MSME, because DGTS, this initiative, doing these kind of webinar month-on-month basis is giving a real-time platform for understanding and education and real handholding to those small-timer taxpayer, those who are looking for what are the compliances need to be done. So if on 31st March financial year closing, we want to see from GST perspective, then it is important that we must know what are things we should keep to our mind. Though CA Tarun Kumar Gupta is going to make detailed presentation, but it's important we all know that from GST perspective, we are filing GSTR 1 and 3B, and then reconciling the same with GSTR 9 and 9C. 9 is applicable, of course, when aggregate turnover more than 2 crore, and 5 GSTR 9C applicable when aggregate turnover is more than 5 crore in relevant financial year. When you look at from ITC perspective, of course, 2B is very important, which must be reconciled with the books of accounts for availing credit in 3B. And then accordingly, it is being furnished in GSTR 9 and 9C. But important aspect which Amish sir was saying, that proper reconciliation. If let's assume we have made any mistake in R1 or 3B for either or region, there's a privilege and opportunity for all of us together. Till 30th November 2024, say we are talking about financial year 23-24, we can undertake rectification of any omission or error in GSTR 1 under section 37 and GSTR 3B under section 39 till 30th November. So this important webinar is going to give you a certain important pointers where you may have made mistake while furnishing your return for 23-24, but till 30th November, you are getting opportunity to correct yourself. And this is given within the provision of law. Having said that, I will request CA Tarun Kumar Gupta to stress upon that certain compliances where threshold amount is very important. And Amish sir has also picked up that one threshold, which is compulsorily generation of e-invoice. I do not know how many of you trade members are aware of, but it is now threshold is 5 crore rupees effective from 1st of August 2023. If your aggregate turnover is more than 5 crore in any preceding financial year, starting from 17-18, then you need to compulsorily generate e-invoice. Are you doing that? If you're not doing, then you may say that you have not followed the same, but the problem will come to your buyer. He will not get credit. His credit would be denied because e-invoice is not being generated. So it is not the compliances only on one part. It is again implication in the hands of recipient for availing credit. Another point would be HSN code and SSC code. We find a lot of dispute on classification and rate. I will request my speaker today to stress upon this classification rate. Why important? Because we have to identify correct classification. Do we know that compulsorily quoting of HSN code and SSC code? If aggregate turnover up to 5 crore, then compulsorily 4-digit for B2B supply. B2C optional. But if it is more than 5 crore, then compulsorily 6-digit unless otherwise stated for 8-digit compulsorily quoting for HSN and SSC code. Why I'm saying, I've seen in the trade, we are having many dispute on classification and corresponding GST rate applicable. Even if you go to GST and portal, there's a one window given where we can go and check it out. What is the classification? What is the corresponding HSN and SSC code and corresponding GST rate applicable? I'm only giving flavor to start this webinar because Tarunji is going to make detailed presentation. Another pointer would be RCM liability, where I've seen many mistakes we are doing from trade side. RCM when applicable. So what are the relevant provision? When to pay this RCM liability? To be paid in cash or through e-credit ledger? Many questions. So for RCM, it may be from registered supplier or from unregistered supplier. If it's falling in specified goods or services, when we talk about section 9 subsection 3 of CGST Act, we have to identify if RCM applicable, by what time I need to discharge GST liability as a recipient. If I don't pay interest, 18% per annum. So I'm just giving flavor which you will get in a presentation today, but it is important for trade members and tax professionals to be ready, because if compliances are being done, I always say preventive maintenance is the best option than doing repairing work after getting accident. So it's better to get preventive maintenance, and these kind of webinar will give you the platform to understand all those compliances. Come to the ITC. Even in 3B, we are having doubt how to mention which figure will go where. Even table 4A are having sub 5 category. Credit on import of goods, credit on import of services, credit on ISD, other credit. Then table 4B, eligible, not eligible. How to show those figures, because these figures are important, because if you have not captured those numbers, then you are not in a position to file your 9 and 9C. So this today's webinar, I'm not going to touch base all the point, but one important aspect, GST and income tax are getting connected. How many us we are aware of? For filing form number 3CD, we have to pick up all total expenditure, capital and revenue, both expenditure, with respect to registered GST supplier, with respect to composition dealer, with respect to non-registered GST supplier, and the payment to them. It is important, and these data need to be picked up for filing of form number 3CD. So today, you're not going to look at only GST perspective, but the GST perspective, which is important for income tax return filing as well. And from other perspective, new invoice series, LUT to be executed if you are into zero rated supply, and GTA if you want to move to forward charge or reverse charge, he has to opt for an option. So these many factors are coming into the picture, and there are certain issues which I will request Tarun to pick up. Related party transaction, schedule 1 entry 2, where there is no consideration but still GST leviable. We have to pick up the transfer, sale of business asset, where ITC avail or ITC not avail, what to be done. Job work, we are sending raw material and capital goods, what is the time period? What are the form ITC 04 need to be filled up? And these are equally important. When you are sending goods on approval, what is the time period? When you should get back those goods? These are all compliances points. So a lot of things today are going to be deliberated. I'm sure Tarunji is going to make detailed presentation today, and we all going to be benefited, tax professional and trade members. But at the submission, I will appreciate my sincere regard to DGTS and Amish sir for taking this initiative. Not only from Calcutta, Delhi, throughout India, he's providing this platform for handholding, education, and learning together. In case you have some doubt, query, of course you can post it, and Tarunji would be available for giving the reply of your queries. And for giving me this opportunity as a keynote speaker today, I'm thankful to DGTS and Amish sir. Thank you very much.
Thank you, Sri Bimal Jain, for your opinion, views, and sharing hands-on experience. Now for the presentation, I would like to introduce Sri Tarun Kumar Gupta, who is a fellow chartered accountant, fellow company secretary, and MBA with major in business management. He has about 23 years of professional experience in the field of finance, financial management, and taxation. He is a master trainer on GST with the Institute of Chartered Accountants of India and guest faculty at the Institute of Company Secretaries of India, the West Bengal National University of Juridical Sciences, Kolkata, a premier law university in the country, and National Academy of Customs Indirect Taxes and Narcotics, NASIN Kolkata, a central government training institute for CGST officers. Welcome, Sri Gupta.
Thank you, sir. Thank you so much for the warm welcome and the introduction. I am really honored to be a part of this great initiative by DGTS, because when Mr. Indranil Roy Chaudhary approached me to be a speaker, I readily agreed, because I thought this is a great service that we as professionals and the department we are doing to the entire nation. Because as I had said in the starting, that big companies or big assessees, they have access to the best of the professionals, but we are really concerned about the small assessees, the SMEs, because like Amish sir said in his initial remarks, that they may be doing non-compliance just because of ignorance, and maybe things are not getting rightly reflected in the returns or in the books of accounts. So they are not able to prove their bona fide on document level. Their intention is correct, but the reason they are getting a notice or a demand is just because their representation in the books of accounts or in the various returns that they are filing has not been correct, and so they are not able to justify what they are saying. So there, I think, because we have been seeing so many notices 17, 18 onwards which are coming, so when we represent it to the officers or when in the department, we are also at a loss to explain that, where is this entry in the books of accounts and where is it reflected in the 3B or 1, and finally when we come to 9 or 9C, that isn't getting reflected. So that is the problem that taxpayers are facing, because all these returns, the entire system was new from 17, 18 onwards, and we also had some issues on the portal. So portal also was not very easily accessible to some. In some cases there were some technical issues also. So a combination of all of them has affected the small and medium enterprises more rather than the bigger ones. So I think this is a very good initiative that we are discussing these important points. And sir, I will tell you that my presentation is based on the experience that the taxpayers have faced from 17, 18, 18, 19, 19, 20 for these years, based on the scrutiny assessment and the departmental audit that have happened. And if we as a taxpayer, we are able to take care of these issues, then I am sure that for this current year onwards, we will not be facing any of these issues. So with these words, I once again thank Shri Amish Kumar Gupta sir, Additional Director General DGTS, for giving me this opportunity. Shri Shailendra Kumar ji, Assistant Director, and Shri Indranil ji, DGTS Kolkata, Shri Bimal Jain ji, my senior in the profession, and we always look up to sir for any guidance that we want. And sir has been very kind to come in so many professional seminars and give us his guidance. So with these words, I will now switch over to my presentation which I have made. I will just do a screen sharing also. Just a second. So is my screen visible?
Yeah, visible.
Okay, sir. So thank you so much for the opportunity. So let me start with a disclaimer that all the information that is there in the PowerPoint is basically to understand the law in simple terms, and this is just a professional opinion of the presenter, and the department is just facilitating the entire thing. For all legal purposes, please refer to the respective acts, rules, or the notifications. And whenever we refer to the CGST Act, the reference is similar to the SGST and the UT GST Act also. The content of my presentation, I think, sir, I have almost like 324, so maybe 1.5 hours, and then we can maybe take question and answers. So the content of my presentation is basically will start with some of the legal provisions, because it is important for the assessees to know that what are the legal provisions with respect to the books of accounts. And then we will go to some of the critical aspects or the critical points we should take care while finalizing the books of accounts. So I have noted down some important 20 critical points which we need to take care. So we will discuss each of them one by one. So we start with the legal provisions of the books of accounts. So section 35 of the CGST Act basically says that these are the important points that one should take care with respect to the books of accounts. Now let me tell you that unlike in the central excise era, where there were some registers and formats that were mentioned in the rules itself, that this is the format or this is what one should maintain, under the GST era, there is no specific format or specific document that is mentioned that is to be maintained. That entire GST Act relies on the books of accounts that are already maintained by the registered person. So, for example, if we look at each of the bullets one by one, so the production or manufacture of goods. So, a manufacturer who is basically doing manufacturing or production, he has to keep a record of the input and the output, the inward supply and the outward supply of goods or services or both, the stock of goods. So any person who maintains a stock of goods, like a trader or a warehouse person or a factory where goods are maintained, so a stock of the goods is required to be maintained. The input tax credit availed, the output tax payable and paid, and any such particulars as may be prescribed. So this is the basic thing that is required to be maintained under the CGST Act. I am getting the comment that sound is low. Is it low or is it okay now? I can hold the mic in front of my mouth. Is it okay?
Fine.
Now it is okay.
Okay, someone is saying, people are saying it is okay. Now it's okay. Okay, so I'll just hold the mic in front of my, I'll hold the speaker. Okay, now it's okay. Okay, so now another thing is that yeah. So a registered person has to maintain a true and correct account of the transactions. Now, as chartered accountants, many a times we use the term true and fair. But in GST, when we are doing filing a returns also, or when we are maintaining the books of accounts, there is no concept of true and fair. The concept is true and correct. So whatever returns are being filed, whatever documents are being presented to the officers during any proceeding, it has to be true and correct. The records have to be maintained at the principal place of business as mentioned in the certificate of registration. So let us take a case where there is a business or a taxpayer who has a principal place of business and he also has additional places of business. So what one should basically do is that apart from keeping the books at the principal place of business, for the records that are for the transactions that are being done at the additional place of business, the additional place of business should also keep the records of that place, which is there in the third point. It says, however, where more than one place of business is specified in the certificate of registration, the account relating to each additional place of business shall be kept at such place of business. So say one has a manufacturing unit, say across the state in maybe say 5 locations. One is a principal place of business and say 4 are additional places of business. So one has to keep the books of accounts for each location separately in that location at the additional place of business also. One, so let us take an example that a proceeding is happening and the officers visit one of the additional places of business. So at that time, the taxpayer should not say that, I don't have any records in this place. It is all in the principal place of business. That is not acceptable as per the GST rules. So the books of accounts have to be maintained at the principal place of business as well as the additional place of business also for that place. And the fourth bullet is also important as per rule 5610, that if any document or register is found at any place other than the mentioned premises. So this generally happens in say a search case. where books or records are found in a third place, which is not mentioned in the certificate of registration. So those will be presumed to be maintained by the said registered person. So if any books of accounts or any tally records or any accounting software is found at a third place or at the place of a third party, that shall be assumed to be belonging to the assessee. So these are legal points, but important points that one should keep in mind. So now let us go deeper into what are the documents to be maintained, because you see now these points are all coming from the experience of scrutiny or audit that have happened from 1718 onwards. So an account of the goods or services imported or exported. If any assessee is in the business of import or export, so a full account of the goods or services imported or exported needs to be maintained. Bimal said about payment of tax under reverse charge. Now there are some specific cases where one avails the services of, say, GTA, Goods Transport Agency. Now GTA is such a service that it is applicable to generally all manufacturers and traders, because if you are handling goods, then you have to avail the services of GTA. Now GTAs are both registered and unregistered. So in case of registered, now they may be under reverse charge or forward charge. So there are some complications also for each of these points. So as a tax payer, you should be aware that your GTA is under what rule they are following: forward charge or reverse charge. They are registered, unregistered, and then you have to pay the tax on reverse charge basis if they are not paying it on forward charge, and you have to maintain a record of all such payments. When we say a record, so it should be kept in mind that we are so what is a record? A record is it can be a ledger. So if in a proceeding the officer seeks the GTA records, it will mean that he is asking you the freight inward records, the freight outward records, so the ledger of all those. Then if you are maintaining ledger of the party wise ledgers, so copies of such ledgers and all that has to tally with the tax that has been paid under reverse charge. Third bullet is inward and outward supplies. So obviously this is very important, whatever purchase or sale one is doing. Bimal sir said about the HSN. So we will come specifically to the point of HSN, but people who are filing GST 9 and 9C, they know that from last year onwards, the HSN of outward supplies has become compulsory. The inward supply is still not compulsory, but one has to maintain that data, because maybe in the next 1 or 2 years that will also become compulsory. So a complete detail of HSN wise inward and outward supplies is required to be maintained. Exempt and non-GST supplies, because exempt and non-GST supply is also important, because one may say it is exempt or it is non-GST, but in a proceeding one has to explain that why is it exempt, which HSN is it falling into, what is the rate, and it also calls for reversal of the input tax credit. So if one is buying certain articles by paying GST, but it is being supplied to a government entity or to an entity where, say for example, it is being purchased by the government entity through a grant, so then there is no GST. So one has to reverse the input tax credit. Also, reversal of input tax credit comes up in case of exempt supplies for common credit. So a record of all this is important. Debit note, credit note. We give credit debit notes, credit notes. We also receive debit notes, credit notes. There are GST related credit notes, debit notes. There are non-GST related debit note, credit notes also, which we generally call as accounting vouchers or as commercial credit notes in normal trade parlance. So a record of all debit notes, credit notes is also required to be kept, and also it has to be disclosed in our GSTR 9 if once people are filing the GSTR 9, and also in the GSTR 1. Details of tax liability on advance received and adjustment of tax liability after issuing tax invoice. This is very important in case of services, because on goods we don't have GST on advances, but in services and especially in case of works contract, So a works contractor who is supplying, who is giving services to a government contract, he is getting mobilization advance, he is getting some advance, but on that he is paying GST, but the tax invoice will get issued only after he reaches a particular milestone. So a record of the entire GST paid on advance received and the future adjustment of that has to be disclosed in the GSTR1 also. So, and it has to be corroborated with the ledger. So that entire record has to be maintained. Details of amendments. We are also doing amendments to the GST number, maybe to the taxable value, to the tax amount of the invoices that are getting uploaded on the GSTR1. So a record of the amendments is also required. Reconciliation, we will come to a separate slide on reconciliation, but the important point is that the department is relying, in scrutiny assessment, the department is relying on the returns that we have filed. So GSTR1, GSTR3B for outward supply, then GSTR2B for inward supply, GSTR9, 9C, we have e-invoices, e-way bill. So there are lots of documents and data that is available to the department, and if there is even a small discrepancy in any of them, one has to provide a reconciliation and give it to the department. So reconciliation is very important, and reconciliation can only be done if you have the right and the full records available with you. When we talk about financial statements and books of accounts, we mean the balance sheet, the tax audit report, the annual financial statements, the profit loss account, director's report, cash flow, cost audit, trial balance. So all of these together, they constitute the financial statements and the books of accounts. When we talk about inward outward supply statement, summary statement, we have to have the RCM ledger and the supportive documents, as we discussed. Sir said about 26 AS, and Bimal sir said that now the CBIC portal and the CBDT portal, they are talking to each other. So when we are filing 3CD, we have to give details of all our GST purchases. The AIS and the TIS records that are getting auto-populated at the income tax website, they are having the entire purchase details, which we are getting, which they are getting from CBIC data. Also, when we are filing our income tax returns, we have to disclose the GST number and also the turnover that is been mentioned in the GST. So we see that our income tax records and our GST records are talking to each other. If there is a small discrepancy or if there is any discrepancy between the two, then it is sure that we will get some notice which will call for an explanation. We had also seen such notices in the service tax era, when the service tax department had accessed data of income from 26 AS, and we had got notices for the mismatch between 26 AS and the ST3. So reconciliation with 26 AS is also very important. Inward outward supply invoices, cancelled invoices. You see, when we are disclosing the invoice numbers on GSTR1, we have to also disclose which are the cancelled invoices, because if in a proceeding one is not able to explain that why is there a skip or a gap in a particular invoice number, and one can show that it actually got cancelled, then the department can do a best judgment and demand tax on that, because one is not able to explain that it is a cancelled invoice. Goods return, inward and outward supply register along with debit note, credit note. So when we are supplying goods or when we are receiving goods, so then, and there is a debit note or a credit note, it has to be linked to a goods return, because if I am returning goods or I am getting goods sales return, so then the return has also to be substantiated along with the debit note or the credit note. Inward supply register and outward supply register, I am writing here soft copy, because many a times during proceedings we are required to submit the entire inward register and the entire outward register, both B2B and B2C, so that it can match with the GSTR 1 and 3B, and we are able to explain that which are the invoices on which we have taken GST input and which are the invoices on which we have paid output. You would have seen that officers want the entire inward and outward registers in Excel, so that if we say that on a particular invoice, so let me take an example that there is a invoice that is getting auto populated in my GSTR 2B, which has a place of supply outside the state, and I tell the department or the officer that I have not availed ITC on this invoice. Now it can be corroborated only when we supply the inward supply register to the officer in a soft copy, and then he can check whether I have availed ITC on that or not. So the entire thing has to be maintained in a manner that it can be given to the department in a soft copy. Zero dated supply register and supporting bank documents like commercial invoices, shipping bill, bill of lading, the bank, the EBRCs, and the inward remittance certificates, LUTs, all these have to be maintained for making any zero dated supply, which is basically export. Details of exempted supply or supply to a SEZ dealer. So in case of deemed export, when we are making supplies to SEZs and all, those documents are also to be maintained. Refunds. So if one is claiming any refund from the department because of inverted duty structure or because of zero rated supply, these are the two cases in which one can claim refund. So one has to keep the details of all these documents. Needless to say that these documents are already checked by the department when the refund is provided to the assessee, but still all these have to be maintained in a way that in future, if there is an audit or if there is any further demand that may come up, then one is able to provide all these details with documentary proof to the department. TDS payments. So government departments who are deducting TDS on payments made to assessees, and the contractors or the suppliers when they get the payments, the TDS is getting deducted. So all these records have to be maintained and corroborated with the ledger. Tran 1 is an old case now, but still, if in future, if there is any requirement to provide any detail, then Tran 1 details also have to be provided. GSTR 2A and 2B mismatch, this we will deal in much more detail when we come to the specific slide. But yes, we all know that when I'm availing ITC on a particular, on a month-to-month basis, then I have to do a reconciliation between my books and the 2B that is getting auto-populated. E-way bill and e-invoice. So e-way bill matching, e-invoice matching, like Bimal sir said, that if one has an aggregate income of more than 5 crores on an all India basis, then he has to issue e-invoice for, so this limit of 5 crores is from 17-18 onwards. So if in any of the last 7 years one has touched the 5 crore aggregate turnover limit, he has to issue the e-invoice. And if you are not issuing the e-invoice, you are no doubt doing a non-compliance, but your customer will not be able to get ITC also because the e-invoice has not been generated. So the implication of one not maintaining books or one not complying is not only on him, but also on the larger ecosystem where he is dealing with his suppliers and with his customers. Foreign inward remittances. So in case of any exports or especially in case of services, the FIRC is important. The corresponding agreements, invoices, the annual maintenance contracts, copies, and all these things have to be maintained. Details of advances received and tax payment, other miscellaneous income, other income, all these documents have to be maintained. The reversal. Now you see reversal, what generally we see in the case of small and medium enterprises is that one may reflect the reversal in 3B, but the corresponding entry in my in my books of accounts is not happening. So say for example, if I have availed input tax credit and then I see that it is the place of supply is outside the state, or if it is related to a exempt supply, so then in my 3B I do the reversal, but in my the corresponding entry that I should have passed in my ledger is not there, and hence when there is any proceeding, there is a mismatch between my 3B and my books of accounts, and I am not able to prove my case in the right way. So in case of any reversal or any reduction of ITC, the ledger as well as the 3B, it has to match. Scrap sales, many a times we are doing sales of scrap, but it is not rightly accounted for in my books of accounts, or maybe the GST one also does not show that I have paid the tax. So that this is a very important point that the participants may note, that even on sale of scrap there is an impact of GST, and one should take care of that. Details of exempted outward supply, exempted supply, I've said that one should maintain the details, and also zero dated supply, which is the supply which is exports. Non-GST supply. Non-GST supply are supplies on which GST is not applicable, maybe alcohol for human consumption, petrol, diesel and all. So these are non-GST supplies on which it forms a part of my GST 1 and my 99C. So I have to maintain the documents for that also. Job work. Bimal sir said about job work and filing of ITC 04. So inward and outward supplies for job work is very important. Credit ledger, input tax credit, availment statement for capital asset, liability, refund claim or any other deduction. So we'll discuss the credit ledger and all in more detail when we move ahead. Cash ledger availment summary. So for liability, RCM. So one linked point to this credit ledger and cash ledger is that, say, let us assume we are filing a 3B for the month of March. Now when I am doing my adjustment of my outward liability with my credit ledger and with my cash ledger, so in the 3B, when I am filing, I am using some part from my cash ledger, some part from my credit ledger, and I am filing my 3B. But that corresponding entry is not happening in my books. So what is happening is that the balance of electronic credit ledger, which should match with the, say, ITC ledger of my books of accounts, is not matching, because I have not done the month-to-month entry of my adjustment of credit ledger and the cash ledger. So that has to be done. So one point participants must note is that the balance of my credit ledger as on 31st March should match with the balance of ITC ledger that I have in my books of accounts in the current asset. Similarly, the cash ledger balance that I have in my cash ledger, electronic cash ledger, that should also match with the current asset that I have in my books of accounts of electronic cash ledger. The payment, when we file our 3B, we pay interest, we pay late fees and all. That corresponding entry should also be done in my books. Otherwise, if I am not doing these entries, my return is saying something, my books are saying something. So these two have to match basically. Reversal of ITC within 180 days due to non-payment. So if I'm not paying my supplier within 180 days, I have to reverse my ITC, and then when I pay, I can re-avail. So those things are happening in 3B, but are not getting reflected in the books of accounts. Bimal sir also said about the HSN and the SCC wise details of outward and inward supplies. So if we are above a particular threshold, we have to maintain 4-digit, 6-digit. For some items, it is 8-digit, and that has to have a corresponding inward supply correspondence. So that has to be maintained. Bank statements. In many cases, we have to produce bank statements also to the officers in proceedings. So that also should be maintained in a manner that it can be given in a case of a proceeding. The GST law also says some specific records that have to be maintained by specific types of assessees. So say for example, in the case of a warehouse or in the case of a transporter, Rule 58 mentions some important things about how records have to be maintained. Similarly, Rule 56(11) says about the books and records that are to be maintained by the agents. Section 35(1) says about the principal or an auctioneer. So if any of the participants today are a warehouse having a warehouse or are a transporter or agent principal, so please look into each of these rules and ensure that whatever is the requirement of law is followed specifically in letter and spirit. The period of retention of books of accounts. So the rule 36, section 36 read with rules 56(16) says that the time limit for retention of books of accounts is 6 years. 6 years from the due date of furnishing of the annual return. So we know that under section 73, the normal period of issue of any notice is 2 years, 9 months, and by the end of 3 years, the order has to be passed. In the case of section 74, which is evasion of duty with an non-compliance with an intent to evade tax, the time limit is 4 years, 6 months for the issue of any notice and 5 years for the issue of any order. So if we read 73, 74 along with rule 56(16) of section 36, so after 1 year, when the time expires under 74, so one has to retain the books. So 6 years is the due date. 6 years is the time limit from the due date of furnishing of annual return till when the assessee is required to maintain his books of accounts. However, in case of any proceeding which is going on with respect to a particular financial year, one shall retain the accounts for a period of 1 year after the final disposal of such matter, or 6 years, whichever is later. So say for example, anyone is facing a proceeding for 17, 18, 18, 19 or any of these years. So till the time the proceeding gets completed and the matter is finally disposed, one has to keep the books of accounts for 1 more year till the end from the date of the final disposal, or the 6-year period which we mentioned, which we discussed in first bullet, whichever is later. And all these documents have to be kept at every related place of business. So like principal place of business, we discussed the additional place of business. So if any proceeding relates to any of these places of businesses, the records have to be maintained at each such related place of business. The Act also says that it is the duty of the registered person to produce the books of accounts. So on demand, so if there is a demand from the department under Rule 56(18) to produce any books of accounts, one is required to produce the books of accounts, and participants may also note that it is not only the books of accounts that are maintained under the GST, which we discussed till now. The department can ask for documents or records which are maintained under any law. Please read the first bullet. It says every registered person shall on demand produce the books of accounts which he is required to maintain under any law for the time being in force, Rule 56(18). So the department has the right to ask the assessee to produce records of, maybe say under the Income Tax Act, under the Companies Act, under ESI Act, PF Act, Factories Act, whatever law is there, and one is required to maintain any record under that law. So the GST department has a right to ask for that document which is maintained under any law. So that is important that the participant should note. And again, the department has the right to ask for records for the last 6 years, which we discussed, because retention is required to be maintained for 6 years. What are the consequences of non-maintenance of accounts? So the GST law has a very serious view in case one says that I have not maintained such records or accounts, because section 35(6) empowers the department to undertake best judgment assessment. So say for example, I have been maintaining accounts for 17, 18, 18, 19, 19, 20, but for 2021 suddenly I say that I don't have the accounts because I was maintaining it in Tally, and so the Tally got corrupted and I cannot produce any books of accounts. So that will not be taken as a submission by the department, because it is the duty of the assessee to ensure that regular backups are taken if one is maintaining accounts on soft basis or on say a software. So then the department has the power to do best judgment assessment, maybe based on the last 3 year sales or purchases or whatever. So the participants should note that non-maintenance of accounts has penal consequences. Non-maintenance of accounts or records is not taken as an acceptable submission by the department, and the proper officer has the power to determine the amount of tax payable on the goods or services or both that are not accounted for. So this is very important. So participants who are maintaining accounts on say softwares, generally we are all using either Tally or some other similar software. So please ensure that you take regular backups of all these accounts on a regular basis. You should have a licensed version of Tally. Please do not use any pirated version of Tally or any other software, because in case there is a problem in the software, then you will not get professional assistance from Tally in retrieving the data. If it is a pirated version or if it is a hacked version, you will not get any assistance from Tally in retrieval of the data. But if it is a genuine software, then you will get professional assistance, you will get experts from Tally or from other software companies to help you to retrieve the data. You should take regular backups. Please have a regular backup policy of the accounts, maybe once a week or something like that. You should take the backup, keep it in a separate premises. So if you have an office where you are having your computer, take the backup and keep it in maybe your residence, so that if there is any problem, at least you can retrieve the data from the backup which is in a pen drive or in a CD, whatever, from any other premises. So you should have a practical approach in keeping backup, and ensure that you maintain the backups on a regular basis. Some FAQs that one may have with respect to the books of accounts. So can the assessee seek time to produce books of accounts if the same cannot be produced instantly? The answer is yes. So say in case of any proceeding, one is required to give the input register, output register, or any other document, you can seek reasonable time from the proper officer and say that I will produce the same within maybe 7 days, 10 days. So some documents are already readily available. So say for example, if the department seeks copies of GST 9C, 3B, 126 AS, the printed accounts and all these things are readily available. So that can be given instantly, but data that has to be prepared in a particular format or in a particular way, then one can seek time from the proper officer and produce it maybe in a reasonable time. Second question that we generally get from the taxpayers is, can I produce records in soft copies? The answer is again yes, because generally the department relies on soft copies, but one should ensure that it is the correct version. It is you should not change the version, saying that, oh, the last version was wrong and this is the right version. Try to give copies in PDF format, so that there is a reliance of the department on what one is submitting. But in some cases the department requests that you should give the data in Excel so that they can do the checking. So I think it is very important to have a good relation with the proper officer, and specifically in the case of audit, if the department requests, I think soft copies can be easily provided. Do I have to provide copies of records which are available on the GST portal? The answer is generally no, because the proper officers or the officers who are undertaking the proceedings have access to the portal, and they are able to download GSTR 3B, 199C, 2A, 2B, and all these TDS returns, TCS returns. So generally they don't ask for these documents, but we have seen that in some cases the officers also genuinely face technical issues because they may not have access, or there is a portal issue. So if they are asking for the data, I think it can be provided. It is in the interest of the assessee that we are cooperating with the department. So this was the first section of the presentation, where we have discussed about the legal provisions of books of accounts, the retention of the books of accounts, which is 6 years, the specific records that are to be maintained under GST, and similar points. Now we will, I am seeing some questions are coming in the chat, but I will request the participants that I want to finish the presentation first, so that maybe some of your answers, you will get your answers to your queries once I complete the presentation, and we can take the question answers maybe little later during the end of the session. So important aspects, like we discussed, keep GSTIN wise accounts. So for example, if there is an assessee who has registrations in, say, multiple states, so he may have maybe 10 registrations. Now what we generally see is that the financial statements is only one, obviously, which is filed with the ROC and income tax. But GST doesn't recognize that, because they want GSTIN wise records. We are registered in 10 states, so we have to have 10 accounts, and then all of them can be consolidated to prepare the consolidated accounts. So we have to have GSTIN wise records, which means trial balance, workings, reconciliation, stock register, all have to be GSTIN wise. We have to match all the returns, GSTR 1, 3B, 2A, 2B, e-bill data, e-invoice data, etc. Because if there is any mismatch between any of these, we are answerable. We have to provide the reconciliation. GSTR 9 and 9C. Now you see, what is important again is people who are filing 9 and 9C, you will see that there are rows in various tables of 9 and 9C in which we have to disclose. So say for example, in input tax credit, we have to disclose what was available last year, which we have availed this year. Similarly, what is available this year, which we have availed next year. Because sometimes we are availing ITC or paying outward supply in the next years. So anything that we miss this year, anything that we don't do this year, so this year any ITC that is auto populated in 2B, I am not availing this year, I am availing next year. So anything like that has impact on 2 financial years, and all these have to be disclosed in 99C. So in so many cases we have seen, when we represent our clients in the department, and when we say that this particular, say, invoices were auto populated in 2B in, say, year 1, but we have availed that in year 2 because maybe of, say, stock in transit, but that is not disclosed in GSTR 9. So although my submission is right, I am able to show through documentary evidence that the goods were in transit, say, on 31st March, and hence although it got auto populated in 2B, I have availed it in 3B of April, but because it is not disclosed in my 9, then the departmental officer also feels little shaky in accepting my submission, because he says that what you are saying is not getting reflected in the returns. So we have to ensure that we reconcile the 9 and 9C in a manner that it matches with my books of accounts. Taxpayers will also note that the 4th bullet, important working should be kept in a file which can be located. Now this is a very important point, I feel, because you see, now when we are presenting our clients for cases of 17, 18, 18, 19, now it is 5 years, 6 years, 7 years old records. The Excel files are not traceable. The workings are not traceable. People have worked on their specific laptops or computers, and now when we have to look at the details of the entries that have got filled in 9, 9C and such records, the details are not available. So it is very important that all the important workings are kept in a manner that it can be retrieved during a proceeding. keep hard copies if it is possible. Maintain it in a manner that in case after 5 years, the department asks for certain document, you are able to match it. And also we know that when proceedings are issued in case of mismatch between my input tax register and my GSTR 2A, because GSTR 9 takes the figures of GSTR 2A, please download the GSTR 2A of that year afresh, because GSTR 2A is a dynamic return. So the difference of 3B 2A, which was there maybe when the scrutiny notice got generated, today it may have reduced. So whenever you are making a submission or doing a reconciliation between the GSTR 2A and the books of accounts, please download it afresh and then do the reconciliation. Now I have put in 20 critical points which one should see while closing of the books of accounts. So we will take each of them one by one and see that what are the challenges that one can face if due care is not taken while closing the books of accounts. So first is the financial statements. Books of accounts. So books of accounts, what does it mean? We know it is the cash book, it is the ledger, it is the trial balance. And for companies may note that now under the MCA rules, audit trail is applicable to companies with effect from 1/4/2023 onwards. So audit trail, if a company or if a taxpayer is not maintaining audit trail, then the auditor will comment on it that audit trail has not been maintained. Now, what does audit trail mean? We all understand that once we create a voucher, once we amend a voucher, the date, the amount, or if we delete it, they have to be recorded in the audit trail software. You cannot put off that option. It has to be on in case of companies with effect from 1/4/2023. Trial balance. In various proceedings, we have seen that the department emphasizes that the copy of the trial balance should be given. So the trial balance should be maintained in a manner that it is duly categorized as group ledger, group summary, ledger, sub ledger, so that at every level you can generate a trial balance and give it to the proper officer if it is demanded. Profit loss account, like we have discussed, GSTIN wise profit loss account. So you have to have GSTIN wise trial balance, GSTIN wise books of accounts, GSTIN wise profit loss account, so that it can correlate to the respective 3B and 1 when you are giving it. And so the total, so say let us assume a company has 10 registrations, so the total of the company and specific 10 states all should add to the consolidated one. So we have to have the trial balance, profit loss account, balance sheet, schedule, notes, cash flow, all of them have to be made GSTIN wise, so that in case of a scrutiny or in case of a audit, one is readily able to provide this information. Accounting entries. Accounting entries, we know that as in when we are making any transaction in Tally or in any software, we have to pass accounting entries. Now, the first bullet says passing of accounting entries for payments through electronic cash ledger and credit ledger. Like I had said earlier, when we are filing our GSTR 3B, we are paying through cash ledger, we are paying through credit ledger, but the accounting entry is not being done in a rightful manner in my books of accounts. The idea is that at the end of every period, the ledger of my credit balance, the ledger of my cash balance should match with the balance in my trial balance, in my books of accounts, so that there is a correlation between the two. Matching of balances as per books and as per portal for electronic cash ledger and credit ledger. This has to be done, if not on a monthly basis, but at least when the books are getting closed on a quarterly, half yearly, or an annual basis. Payment entries with respect to interest and late fees. Whenever we are making payments of interest or late fees in my 3B, those entries should be made in my books of accounts also. DRC 03. Now you see, many a times we are making voluntary payments. We are making payments against show cause notice or against my scrutiny assessment and using my credit and cash ledger and making payment through DRC 03. Those entries are not happening in my books of accounts. So that is the reason, even if I am declaring or I am discharging my liability in DRC 03, assessees are not making those entries in the books of accounts. So there is a mismatch between what I have paid and what I have actually recorded. Electronic liability register, assessees and participants will note that as soon as a demand is generated or an order is passed, the electronic liability register on the 3B on the GST portal is getting updated nowadays. So companies have to make a disclosure of their pending cases. So one should ensure that the details which are already getting reflected in the electronic liability register are taken out, checked, and one should ensure that those disclosures are made in my financial statements. Outward supply. So as I said that nowadays in GSTR 9, the HSN wise outward supply is compulsory. So please reconcile the HSN wise and rate wise outward supply, which is maintained in the books of accounts and which is disclosed in my GSTR 1. Reconcile the job work with the job work register. So if assessees are in the business of wherein they have to use the services of a job worker, so job work and job work register is maintained. ITC 04 is the register which one has to maintain and file for job work. Goods sent on approval basis. Bimal sir said job work. Bimal sir said goods sent on approval basis. These are very important because if one sends goods on approval basis, within 6 months the invoice has to be made or the goods have to be returned. If the goods are not tracked in a proper manner, then it may so happen that goods have been sent and it has crossed the time period and neither they have got returned or the invoice has been made, and all these come to the forefront when a proceeding starts. And then when people start reconciliation, all these things come out that, oh, I had sent goods on approval basis, but neither that person is returned or I have raised a tax invoice, and thus there is a tax liability. So that reconciliation should be done of goods sent on approval basis. Reconcile GST wise liability and total liability as per registration as per PAN. So what does it mean? That if my total liability is 100 rupees and I have say 10 registrations, the total of all these 10 should match with the total 100 rupees liability, because in some cases we have seen that something falls between the cracks. The principal place of business is discharging its own liability and assuming that all others are doing their own liability. But when we are doing a overall reconciliation between all the GST 9, 9C and all, and ensuring that my compliance level is high, then one sees that there are some cracks, some transactions have fallen between the cracks, and these are especially inter GST and related. So branch transfers they have been done, but say tax has been paid, ITC has not been availed. And so there is a problem. So this entire GSTN wise reconciliation should be done for the entire company. 26 AS. Now 26 AS is generated for the entire company as a whole. Now this is a big problem area which I have seen, particularly in cases where assessees have multiple registrations in across states. So say I have registrations in 10 states. My 26 AS is only one, because obviously it is PAN based. Now the first thing I have to do is I have to segregate all the entries that are there in 26 AS state wise. So that exercise has to be done first. Then I have to understand that in a particular state, so say West Bengal or for say Delhi or for, so transactions of that state, whether it has been duly reflected in my GSTR 1. whether I have raised the tax invoice. So I have to do a entry by entry matching of 26 AS with my GSTR1. Now the issue that one may again face is that the 26 AS does not have the invoice numbers. It has only the amount and the date. Now there can be cases where same amount or same are issued in multiple dates. So that is an exercise that the assessee has to do, that the entries in 26 AS have to be matched with the invoices that are issued and uploaded in GSTR1, and a proper reconciliation should be done between such figures, because I have seen that in case of proceedings, especially audit proceedings, the proper officer may ask you for a reconciliation between the GSTR1 and the 26 years. So you should be ready. Now, if this question is asked for, you asked now for 1718, it will be difficult for you to maybe provide that data. But if it is already prepared and kept in your file, anytime the officer asks, you may give that data. So it is important that reconciliation is done between 26 years and the supply data as per GSTR1. Reconcile supply after netting of branch transfers, sale of fixed assets, supplies on which GST is not payable, etc. So there are some unique transactions which are treated differently as per GST law and as per our normal accounting parlance or normal accounting that we do. First is branch transfer. So if I am transferring, say, supplies or goods from state 1 to state A to state B, in my books of accounts it is a normal transfer, it does not reflect my profit loss account. But when we are doing GSTI wise profit loss accounts, in the state A where I am doing the transfer, it will come as a supply on which I have to pay tax, and in the profit loss account of the recipient state, it will come as an expense, as a branch transfer inward, because that is an expense and I have to take input tax credit. So this is a unique thing for GSTIN which doesn't get reflected in my books of accounts. So that netting of transaction has to be done. Similarly, sale of fixed assets. Now sale of fixed assets is not reflected in my profit loss account, only the profit or the loss on the sale is reflected, the cost gets deducted in my balance sheet, but the entire thing is taken as a supply in GST. So the turnover as per my outward supply as per GSTR1 will differ from the turnover as per my profit loss accounts, and that reconciliation has to be done and reflected as a part of my GSTR 9 and 9C. So people who are doing GSTR 9 9C, obviously they will do this reconciliation, but assessors who are below the threshold limit of 2 crores and 5 crores, so they will maybe not be doing that reconciliation, but it is important that you do that reconciliation. Otherwise, in future, if you are asked, you will not be able to provide that. Supplies on which GST is not payable. So non-GST items on which the rate is 0% or zero rated supplies. So all these have to be maintained. So overall, on outward supply, what we can say is my profit as per my income as per my profit loss account for the entire company has to match in a manner that it matches with my GSTR1 outward supplies. Now input tax credit. Now this is one of the most contentious areas in GST, because input tax credit, as we are seeing, is attracting the maximum number of, say, litigation areas, because the GST Act is very clear that in which circumstances you can avail input tax credit, in which circumstances you cannot avail input tax credit. There is some block credit which you cannot avail. It has to be availed based on your GSTR 2B, and it has to be finally reconciled with your GSTR 2A in your GSTR 9. So there are so many conditions, eligibility conditions for input tax credit, and one should be 100% sure that if one is availing input tax credit, it is his rightful amount. Otherwise, there is a subjective thing that may come up in future. So what are the important input tax credit points we see here? So one is a reversal of common credit. We know that section 17(2) read with rules 42 and 43 call for reversal of common credit. Now, what is reversal of common credit? So say for example, if I have a total turnover of say a total supply of say 100 rupees, in which say 95 rupees is my taxable and 5 rupees is my common, is my exempt supply. So it means 5% is my exempt supply. Now let us come to the input tax credit. So input tax credit, what does it mean? So supplies which are taxable, I am eligible to take 100% of the input tax credit connected with the taxable supply. The exempt supply, I am not allowed to take any credit for the exempt supply. So anything that I am selling at 0%, and even if I am paying at say purchasing that at 5%, I am not allowed to take input tax credit. And third is my common credit. So input tax credit, which is used for supplying both taxable supplies as well as exempt supplies. So say for example, audit fees, insurance charges, bank charges, security fees, all these internet charges, all these things are common credit which you cannot differentiate between your taxable or your exempt supply. So this calls for reversal to the extent of your exempt supply. So exempt supply we saw was say 5%. So 5% of your common credit needs reversal under the GST law. This reconciliation is required to be done because the scrutiny, one of the scrutiny parameters is reversal of common credit, and if you have not done that, then it will be required during the proceeding with interest and maybe penalty. The second is block credit. So section 17(5) specifically restricts input tax credit on certain items, which is called block credit, section 17(5). Please have a look at that very carefully, and please do not avail input tax credit if it is a block credit. The place of supply is outside the state. So for example, if I am registered say in West Bengal, and if I go to a hotel and stay in say Delhi, and I give my GST number to a hotel in Delhi, then the place of supply will be recorded as Delhi, and in Calcutta in West Bengal I am not allowed to take the input tax credit of my hotel stay in Delhi, even if it is getting reflected in the GSTR 2B, because the place of supply is outside the state. So I have to account for the entire expense as a cost, and in my 3B I have to show it. So the 3B I have to show it in a manner that in 4A5 of GSTR 3B I show first I avail it because it is getting auto populated in my 2B, and then in 4B2, in 4B2 I show it as a permanent reversal, and then it links with the block credit and the place of supply. So that is how I have to show in my GSTR 3B, and this has to be reconciled in a manner that in future I can tell the proper officer in a proceeding that you see this is a block credit which I have not availed in my 3B, and I have duly reversed it. The fourth bullet is again very important, because although we talk in our normal parlance as GST, but GST is comprising of three separate buckets: the IGST bucket, CGST bucket, and the SGST bucket, and all three have to be taken care of properly. One cannot avail ITC in a particular head if it is eligible in some other head. So in 1718, 1819, we have seen in some cases of assessees where inadvertently they have availed input tax credit in some other bucket, whereas the invoice was for some other tax. So getting relief on any of these points becomes very difficult. So please understand that GST is not only one tax, it has three separate buckets: IGST bucket, CGST, SGST, and the books of accounts should ideally show all these things separately, because if you see that in your income tax return also, in the income tax return that we are filing, there also we have to show it separately. The IGST, CGST, SGST, it has to be shown all separately under under Rule 43 B of the Income Tax Act, where we have to disclose that any liability of a particular year, so say a liability of March, we are discharging in the month of April, so that has to be disclosed in the income tax return separately as IGST, CGST, SGST. So we have to maintain our books in a manner that all three are recognized separately. Reversal of any payment, non-payment to any vendor within 180 days and reavailment, that also has to be tracked in a manner that it can be shown in my books of accounts. Download all related files for workings. Now, participants will note that when we go to the annual return tab, there we can find the system generated documents. So we can see the system generated GSTR 9, we can see the summary of GSTR 1, summary of 3B, table 8A. Table 8A is the entire year's 2A that we see. So table 8A of GSTR 9 we can download in Excel format. Then we have the tax comparison tables. This is very important table which is auto generated on the portal and we can download it. So please download all these files before you start any reconciliation process, because this will tell you that what is the status of the returns that you have already filed on the portal, and you can take that as the starting point and then see what is recorded in the books of accounts and reconcile both of them. You will also have to file all your pending GSTR 1 and 3B before you download any of these documents, because all these documents are generated only after you complete all your filings, except the tax comparison table. All other tables like summary of GSTR 1, 3B, table 8A, summary of system generated 9, all these are getting generated after you have completed all your pending 3B1 filings. And please keep, like I have said, please keep all workings safely in a file, preferably hard copies, so that in future, if you have to produce any of these documents, you can show it in a ready format. Please have a look at this while I have a sip of water. Please have a look at this slide. So participants can see that I have tried to map the data that is already available with the department, and it is all filed by us only. There is nothing new that the department is generating. So we are generating GSTR 1 data, we are generating GSTR 3B data, GSTR 2A, 2B is getting auto generated based on the returns of GSTR 1 filed by the suppliers. We have the e-invoice data, we have the e-way bill data, we have the tax comparison table like I just said, we have 99C, we have 26AS generated by the income tax department. Then we have our own books of accounts, which is basically the ledger and all these financial statements. Then we also have third-party data, which basically means that my data with respect to my supplier or my customers' data. So in any proceeding, the department can go to the third party and seek corresponding data. Then we also have some other government data. So say, for example, mining companies are filing returns with the mining department. So the mining department has data. We have the ESI data, we have the PF data, the Factories Act data. So there are other government data also which is there, and similarly, etc. So there is lots of data that is available in various systems. And if you see the scrutiny document that is issued by the GST department, it will start by saying that your outward supply as per GSTR 1 is say X, as per 9 it is Y, as per 9C it is Z, as per e-invoice it is A, as per e-waybill it is B, and we will take the highest of the 5 or highest of the 6. And then that is how it will start. So that is the starting point for the department, the highest of all of this data, and then how much is the tax payable, how much you have paid, and what is the demand. And then your work starts, wherein you have to do the reconciliation, that what is my right figure and how I have uh, done the reconciliation, and you arrive at what the department is showing you. So lots of data is available. You have to ensure that three important things are matching. So one is your books of accounts. Your books of accounts is the final document on which one has to rely on. So in a case where we take the extreme case, where your GSTR 1 data is incorrect, GSTR 3B is incorrect, GSTR 9 is incorrect, GSTR 9C, all returns are incorrect, but what will then the department rely on? It is the books of accounts. So your audited books of accounts have to be in a manner that the actual liability of GST, both inward and outward, can be estimated and can be crystallized. So books of accounts is the most important data that you should have. That is number one. Number two is your returns. So returns, what do I mean? The monthly compliance that we are doing, GSTR 1 and 3B. So try to ensure, this is what I tell to all my clients, try to ensure that your GSTR 1 and GSTR 3B is generated from the tally data. If you are able to have a discipline that your 3B data and your 1 data matches on a month to month with your books of accounts, then 99% of your problems are solved. And third is, like sir had said in the beginning, GST 9 and 9C. So if there is anything that is left out during your monthly returns and you find out that, oh, this is what I left out, and so GST 9 and 9C should necessarily match with your books of accounts. So these three are very important that you should keep in mind. One is your books of accounts, because that is the base document which everyone will rely on. In case everything all is incorrect, the books of accounts has to be taken as the Bible, number one. Number two, please ensure that your 1 and 3B are generated on a month-to-month basis from your accounting system. And third is GST 9 and 9C. All these, if there is any issue during the year, please correct it in your 9C. And then you will see that your tax comparison table, your 2A, 2B, your 3B data, 1 data, all will match. And you will have no problems explaining anything to the proper officer. So the important reconciliations that you should do during your finalization of accounts is outward supply, for example, outward supply 3B1 data, the 1 e-way bill data, and e-way bill and e-invoice data, because many times the department is also comparing your GSTR 1 and e-way bill data, and in case of any discrepancy or in case of any mismatch, the notices are coming. Let me give you one example. So in your e-way bill, when you are say sending goods for export as zero rated, so it will show in your e-way bill data, but it doesn't show in your GSTR 1 data because you may not have shown that zero rated. So there is a mismatch, and notices will come because of the mismatch in e-way bill data and GSTR 1 data. So please ensure that this reconciliation is complete. And also for SSCs who are having aggregate turnover of more than 5 crores, you have to do e-invoice. So please ensure a reconciliation between your e-invoice data and the e-way bill data. Then input tax credit, 3B, 2B reconciliation on a month-to-month basis for availing input tax credit. Purchase ledger and 2B data on a month-to-month basis to ensure that the books of accounts and my 2B are matching. And on a yearly basis, table 8A and your 2A or 2B. So to ensure that all this data is matching on an annual basis. Total turnover, your 3B data and 99C data, 99C data and books of accounts data, and books of accounts and other data like 26AS, which we just discussed. So all these, one has to ensure that all these reconciliations, these are the important ones I have mentioned here, but I also said the list goes on because some assessees may have some peculiar things. Say for example, I mentioned mining data, so mining records are returns are filed with the mining department, and Factories Act records are maintained, ESIPF records are maintained. So one should also ensure that all these records are reconciled with each other. Debit note, credit note, outward supply. So when we are doing outward supply, we are maybe issuing debit notes and credit notes. So please link the debit note, credit note with the original tax invoice, because during any proceeding, the link between the tax invoice, original tax invoice, and the debit note, credit note is very important, especially in the case of credit note, because there you are reducing your tax liability. In case of a debit note, you are increasing your tax liability, but in case of a credit note, you are decreasing your tax liability. So please maintain a direct link between the tax invoice and the credit note. In case these credit notes or any of these are issued because of, say, any sale return or any goods getting damaged, the reason of the credit note should be mentioned, and please maintain full records so that in case when there is any proceeding, one can disclose or one can show that to the proper officer. B2C credit note, debit note, it has to be shown as a net item in table 4A in GSTR 9. So supplies made to unregistered person should be shown as net. So we know that all sales are either classified as B2B or B2C. In B2B, we have the number of the customer, and so we can easily track the debit note, credit note. But B2C sometimes becomes a problem because the net figure is shown in GSTR 1 and also GSTR 9. So during the year, during the month, during the year, whatever is my sale minus my credit note has to be disclosed. So that working has to be properly done, because then you can prove to the proper officer that this is the way I have done the working and this is the way I have calculated my liability. So B2C credit note, debit note, please take a note. It is very important that workings are available with you. And similarly, B2B credit notes, debit notes, you have to show it separately in GSTR 9 and GSTR 1, so that the receiver can also account for it in a manner that he either decreases his liability or increases his input tax credit. Debit note, credit note of inward supplies. This basically means that for my purchases that I am doing inward supply, I am also getting in debit note, credit note from my suppliers. So there also I have to link it to the original invoice number. The important one again being credit note, because if my supplier has issued a credit note, I have to reverse my corresponding ITC. And in some cases, we have got requests from our suppliers that please issue me a certificate that you have duly reversed the input tax credit, and then only he will get the benefit of deduction of his outward supply. Otherwise, the department may disallow him the outward supply, the deduction in the outward supply, on the pretext that the customer or I have not reversed my ITC. So this is very important. This is very important. Okay, then yeah, again, please keep a record of the sales return, goods damaged, and reason for the supplier issuing the credit note. Please maintain full documents and reconcile the credit note received with the reversal in 3B, either on a gross basis or a net basis. You see, the 3B has also changed 3 or 4 times in the last 1.5 years. Because what used to happen is earlier we used to report the credit notes on a net basis. Then the system changed, and then it was from April 22 to I think July or August 22 that it was supposed to be shown on a gross basis. Then again the 3B changed, and now it is shown on a net basis. So taxpayers have faced some issues on the change in the format of 3B also, but we have to understand that this is done in a manner to reconcile the overall balances between the taxpayers. So credit note and the reversal either on a gross basis or net basis is also to be shown, and especially for 17-18 onwards, 18-19, 19-20, we have seen that assessees have taken input tax credit on a net basis. So as I said that previously we were supposed to show it on a gross basis, that separately I have to avail the entire ITC and then show the credit note separately. But in many cases, taxpayers have availed net ITC. So that can only be explained in a proper manner if the workings are available with us. So please maintain workings of the credit notes. The 10th point again relates to amendments. GSTR 9 seeks the details of the amendments, both plus and minus. Taxpayers can declare the values on net basis also and not show it as amendment, but it is advisable to show it as an amendment, because I will tell you why. In some cases, taxpayers have faced notices for payment of interest, because what has happened is, say for example, in year 1, I have issued a tax invoice on a customer as say B2C. Now, when he is doing his reconciliation, he comes up to me and says that you have erroneously shown it as B2C, please issue it as a B2B. So what I do is I do an amendment and I add the B2B invoice and I show it as a minus in the B2C. Now, the department sometimes takes it as late reporting of invoices in GSTR 1 and levies interest on the entire period of late reporting and says that you have late reported your invoice in GSTR 1 and so you have to pay interest. Now, if this is adequately reported in my GSTR 1, I can show that you see actually this was a B2C invoice which has now got translated into a B2B invoice. So as the slide says that you can show it as on net basis also, but it is advisable to show the amendment so that in such cases where the department is raising issues of late reporting of invoice in GSTR 1 and levying say interest, you can adequately explain to the proper officer that this was an amendment or this was a change from B2C to B2B that has happened. Exempt supply. Exempt supply is details of exempt supply to be kept for future reference, because it is in all notices we have seen that when someone declares something as an exempt supply, you have to produce the relevant documents, the HSN number, the tax invoice, that why is it an exempt supply and why GST should not be charged. Also because as I mentioned, exempt supply calls for reversal under 42-43 of the common input tax credit, or the there's a calculation for reversal of input tax credit on capital goods which is under rule 43. So details of exempt supply have to be maintained. No supply also has to be maintained and shown in the GSTR 1 and GSTR 9, which are basically schedule 3 items. Then Please link the exempt supply to disclosure in schedule or final accounts. So whenever there's an exempt supply, it has to be linked to the schedule which is there in the final accounts. And in case one has shown something as a exempt supply but is not being able to substantiate it, then he may be charged at the maximum rate of 28% by the department as a best judgment assessment. So you understand that if records are not available, if reconciliations are not available, then the department is well within the right to do best judgment. Reverse charge. Reverse charge is something that if you are able to comply, it is a net zero cost to you, because you can pay the tax and take input tax credit. But if you don't comply and it is found out that one was supposed to pay GST on reverse charge and has not paid, then you will have to pay the GST on reverse charge along with interest and maybe penalty, and you will not be able to avail the ITC. So then it becomes a net cost to the taxpayer. So please ensure that you reconcile your accounts and payments with 3B. So whatever you pay in 3B, please avail that only. Whatever gets auto-populated in 2B, please reconcile with your books and ensure that you pay reverse charge on those invoices. Whatever doesn't get auto-populated in 2B because the supplier is unregistered, please maintain proper accounts and link it to your ledger and pay reverse charge. Like I said, for GTA, please scan through your freight inward, freight outward and such accounts and link that to your GST payment. And if it is a registered supplier, if it is unregistered supplier, please pay it under reverse charge. Security is under reverse charge, advocate fees is under reverse charge, and there are some more items. So you can refer to notification 4/2012 central tax for the reverse charge on goods, and notification number 13/2017 for the reverse charge on services. So please have a look at both the notifications, and if anything is applicable in your case, please pay it, and you can avail the ITC now if you do it. But if you do it after the September return, after 30th November, then you cannot avail the ITC also in that, and it becomes a net cost to you. So please ensure that this reconciliation is done. It is very important. The other points of input tax credit is that no ITC can be availed through GSTR 9. So please claim all your ITC, do all your reconciliations between 2B till the return that is filed till 30th November. Reconcile your book balance with electronic credit ledger, and ITC availed, reversed, reclaimed should be disclosed separately in your GSTR 9, and ITC availed in ITC 01, which is basically ITC on new registration, and ITC 02, which is ITC received from another GST, for example, in case of merger, should be disclosed separately in GSTR 9. So the reason I'm linking all these points to GSTR 9 is that taxpayers who are filing GSTR 9 and 9C have to link the entire year's returns with the annual return in 9 with their books of accounts. So books of accounts and all these returns linked to 9, the disclosure is very important. The ITC reversal we have discussed. I want to finish this in another 10 minutes so that we can do some question answer post 5 o'clock. So maybe I'm little rushing in between, but I just want to stress on the important points. In input tax credit reversal, we have discussed. So rule 42, 43, 17.5 block credit, all these have to be done, reported in a manner in GST 9 and 9C, and accounted for duly in your books of accounts. Current year transactions reported in previous year next year. Like I had said, that if you are doing something for this year, it is not affecting your return only for this year. It may also affect the return of the last year and also for the next year. Like I said, input tax credit available in 2B in March, but not availed in 3B in March because of goods in transit. It is availed in the next year. So it will affect your GSTR 3B both April and March, and also for the financial year GST 99C this year and next year. So outward supplies, inward supplies, last year, previous year, next year, please do a reconciliation now so that a proper disclosure can be done in your GST 99C. Deemed supply, Bimal sir said that I should cover deemed supply. So deemed supplies, principal to job worker, reported, it has to be reported in GSTR 9. Goods sent on approval basis but not returned, as I said, it will become a deemed supply, and it will have to be reported in GSTR 9 again. So deemed supplies again is very important. Documents to be prepared. Now you see, when we are filing our GSTR 9 and 9C, which is the annual return, we have to prepare GSTIN wise financial statements. Like I had said, that if I have a registration say in 10 states, I have to prepare 10 financial statements, because I have to attach the financial statement of that particular state with my GSTI 9C. So accounts have to be prepared in a manner that you can split it GSTIN wise. Also, if you have say 5 registrations in a particular state, then in that state also you have to have GSTIN wise accounts. So you have to maintain your books in a manner that you can split across GSTIN, and that is required for all the schedules for your fixed asset additions, depreciation, sale, financial statements, cash flow, trial balance. Everything should be prepared in a manner that you can extract the information from your books of accounts only. HSN wise details. So like sir had said, Bimal sir had said, it is mandatory for all taxpayers having B2B supplies and or aggregate turnover of more than 5 crores in the previous year. Minimum 4 digit for taxpayers up to 5 crore and 6 digit for taxpayers over 5 crores. So this is very important, and this has now become compulsory in your GSTR 9 also. So the point here is that unless you maintain 4 digit, 6 digit HSN as required for you, you will not be able to disclose it in a manner which is required in 99C, or in case the department asks you HSN wise data, because you see HSN wise data is already required to be reported in GSTR 1. So unless your books are maintained in a manner that you don't account for it in HSN wise, you will not be able to report it in GSTR 1 number 1, and also do a reconciliation with your inward supply, because as of now inward supply GSTR 1, GSTR 9, it is optional, but there are cases that department is looking in proceedings, department is asking for inward HSN, outward HSN both. So this has to be recorded in a manner that it is available in your books of accounts. Additional liability, if any, it comes out, please pay. If you are paying it, you can pay it in your GSTR 3B for the returns that are filed up to 30th November, and post that you should pay it in DRC 01, sorry, DRC 03 as voluntary payment. So that is additional liability. The additional liability can be paid through cash or credit ledger, and so many times taxpayers come to us and ask whether we should pay the liability or wait for any communication from the department. The answer is always please pay voluntarily, because if not anything else, it will save you from penalty. It will show your bona fide that you have on your own paid the tax with interest. So please pay, don't wait for any notice of or any intimation from the department. And there is always a question that we come across, that whether we should pay in 3B or whether we should pay in DRC 03. So the answer to that, now there is no official clarification on this from the department, but this is my personal view, that if you are able to pay, identify the difference and pay, then you should pay it in 3B for the returns that you file up to 30th November, because that is what the Act allows. But if after that you have come to know about a certain discrepancy, about a certain liability that comes to your notice after you have filed the annual return or after you have filed all your returns by 30th November. So please pay it in DRC 03 as a payment along with annual return, or after the annual return also as a voluntary payment, and pay interest also, because unless you pay the tax and the interest, you will not get the benefit of penalty. The interest has to be paid on the cash component and credit component both, because if you have delayed payment, then you have to pay the interest on both components. Penalty is payable if you don't pay within. So if it is a case of a show cause, if you don't pay within 30 days, then you have to pay the penalty also. Penalty under 73(11). You can get a show cause notice if you don't comply with any of these requirements, and it can be under 73 or 74 both. So these are some important points for you to choose between 3B or your DRC 03. Now I have come to the end of my presentation. Now we can do the question answers. Thank you so much for a patient hearing.
Thank you, Sri Tarun Kumar Gupta, for such an exhaustive and lucid presentation, and I am sure all of us have been benefited by it. Now I would invite participants for questions, if any. Please ensure that the questions asked should be relevant to our today's topic. Further, the questions can be asked using the chat box.
Okay, chat. Okay, it will be through the chat box. Okay, just a second. Let me access the chat box. I think there are already some questions.
You can take one by one.
Yes, there are. Okay. Okay, there's a question. Please raise issue of 3B versus 2A in 1718 and 1819. So someone is asking that, yes, this is a genuine issue that taxpayers have been facing, because GSTR 2A actually came only in 2018-19 onwards, but it was made available for 2017-18 also. So I don't know what is the real question in this, but this is a genuine issue that taxpayers are facing because of the non-availability of 2A for 17, 18, 18, 19. But the point is that when the scrutiny is taking place, the department is relying on the auto-generated 2A and the ITC availed in 3B, and one has to explain some of the reasons why there is a difference between the two, and this is a litigated matter also, because there can be various reasons of the difference, and and the courts have held, including the Honorable Supreme Court, they have held both in the favor of the assessee and in the favor of the department on specific cases. So we will have to see what is the specific case that is there in this point. Is there adjustable depreciation, asset sale, profit in block wise adjustment? Sorry, I am not able to get this question. Department should consider allowing negative supply figures in 3B, where in a month supply is less than credit notes. No, yes. You see, this is a difficulty the 3B return will follow, because if one allows the negative figure, then it will akin to a refund, and refund has a separate provision under 54. So I am not sure whether this can be taken care of by allowing the credit notes, but anyways, your point is taken. It is requested to raise matter related to notices issued under 74 and its impact on books for closing of financial years. You see, 74 is a matter in which basically it comes up only because it is not disclosed correctly in the books of accounts. So, and it can be raised only up to, and it can be raised maybe 4.5 years after the books have got closed. So if it is duly disclosed in your books of accounts, it will come under 73. If it is not disclosed, it will come under 74. So I'm not sure how 74 cases can be taken care of while you close your books of accounts for a financial year. But I would say that if one correctly discloses all his transactions of inward and outward supply in books of accounts, cases of 74 will not come up at all. Sir, I am skipping some points which are not related because there may be no answers to these questions, because someone is saying, "Hi sir, please reduce the due date for filing of GSTR 1 to 11th of next month, as it creates ITC deferment on a monthly basis."
Answer only those topics.
Yes.
Questions are relevant to the topic.
Yes. Can audit by department take place after issue of ASMT 12? The answer is yes, because section 61 clearly allows the department to take up audit after audit under section 65 after the scrutiny has been done, because ASMT 12 may confirm that there has been some evasion of tax after they have completed the scrutiny, so audit can be taken up. Yes sir. Yes, okay. Okay. Should interest income from FDs be reported in GSTR 1 and GSTR 3B as exempted supply? The answer is yes, because FDs, the interest from FDs is an exempt supply, and it is better to report exempt supply also. Is ITC available from a supplier whose registration has been cancelled retrospectively, although supply was made when registration was in full force? Yes, this is a litigated issue, you see, because in some cases the registration of assessees is getting cancelled suo moto from 1717 itself. And in such cases, when, like the question says, when I had done the procurement, the registration was in full force, so it means that it was active. There is a judgment also, I think from Calcutta High Court, that in case when I have done the purchases and it was active, so then the department should ensure that there is no connivance between the supplier and the recipient, and in that case ITC should be available. But at the department level, the getting relief on this point is little difficult. This is what I can tell you from my personal experience. If I take an ITC which is not reflecting in 2B but received in 2A, then any notice may come? The answer is yes, because from 1/1/22, 1st of January 2022, one can only avail ITC which is getting reflected in your 2B, and if one avails ITC which is more than in 2B, then an auto-generated notice will come to you in DRC 01, I think C or 01D. The only exception I can make in this is if I have paid IGST on import, because in some cases what happens is that the flow of information through IceGate is not happening on a real-time basis, and one may have to go to the GSTN and there is a functionality where you can draw the BOE, bill of entry details. So even if after that also your IGST is not getting reflected in 2B, in that case I can still make an exception and I can avail the ITC, and then if a notice comes, there is a reason which I can write, specific reason, and I can report that. So in that case I will just make an exception. Otherwise, in all cases, if it is not reflecting in 2B, please don't take it. Is it mandatory for the taxpayer to report a minimum 4-digit or 6-digit of HSN code in table 12 in exempt and non-GST output supply? 4-digit is compulsory, I think, yes. 4-digit is compulsory for up to 5 crores, and more than that, 6-digit, because if you don't report it, then how will the department come to know whether it is actually exempt or not? So that is required. Whether audit log is required to be maintained at GST? No, it is not a GST provision, it is a Companies Act provision. So audit log is a Companies Act provision. 2A, is it required to match with all returns since the return is finalized based on 2B? Let me read it again. 2A, is it required to match with all returns since the ITC is finalized based on 2B? No, I am not getting the question, but I can try to answer that. You see, on a month-to-month basis, when I am availing my ITC, it has to be based on 2B. So for a month-to-month basis, please avail on 2B basis. But if you are required to file your GST at 9, then GST at 9 takes the figures of 2A. So in that case, you will have to reconcile with your 2A. So month-to-month basis 2B, on an annual basis 2A. That is my answer. Purchase material from registered supplier, but he has not filed returns, hence ITC not available for credit last 6 months. What can be done in this case? Financial year 23-24 will end. We can take credit and no. You see, it is very important to understand that you can avail ITC only if it is auto-populated in 2B. So if the registered supplier has not filed the return, you have to ensure that he files the return in a manner that it is available to you and you can avail it in your till your November return. You cannot avail ITC in your annual return. Please note. Is it necessary to reconcile the ITC ledger from books with online credit ledger? Yes, it has to be. It is necessary because in the case there is a proceeding, you will have to show that your ITC ledger and your electronic credit ledger, which is available online, matches. So it is important that it is reconciled. Is it mandatory to pass the periodical debit entry of ITC debit? Yes, it is mandatory, means it is a accounting requirement that whatever adjustment of cash or credit you are doing in your 3B, it should get reflected in your books of accounts. Is there reverse charge on asset insurance or term life insurance? No, there is no reverse charge. Or any type of insurance? No, there is no reverse charge. Supplier does not file GSTR1, what will be implication as it has not reflected? I am not going into the litigation points, but if the supplier has not filed GSTR1, it is not reflecting in your 2A, please don't take the input. Many times bill of entry not reflected in GSTR portal transmission issue with IceGate and receive notices. How to resolve it and what is the permanent solution to this? It's not in SSC controllers. So you see, I have already replied to this point that in many cases when we import goods, the IceGate data doesn't flow on a real-time basis to the GST portal, and hence it is not showing in my GSTR 2B. So in those cases, what you should do is that there is a functionality on GST portal which says BOE details. So you can write the bill of entry number and that draws the information from IceGate. In majority of the cases, you will see that it gets reflected. The information is taken from IceGate and it gets reflected in your GST portal. But still, if it is not available, I will suggest you can take the input tax credit, and if there is any system generated notice that you receive, you can very well write that this is an import and it is not getting reflected in the GST portal. So this is a reasonable answer that is available. Is it possible to change our additional place of business with the primary premises? Suppose GST is registered at premises A, but later we add premises B as additional place, but now we are not working from premises A, we want to change it to premises B as primary location. Yes, the answer is yes. If you want to delete the primary place of business and make any additional place of business as the primary, it is possible. party
A
has.
lot of these questions are, not related to the topic, which I find.
Yes, sir.
Asking for special, advices or, different issues they're asking. Our
Yes, sir.
topic, we should remind our, attendees that our topic this day was regarding the accounts, for closing our accounts, what are the documentation required, all those things. So anything related to that you can answer. Otherwise, you guillotine it now.
Okay,
So,
sir. Got it, sir. Got it, sir. Party has filed wrong credit note on us. How? But there is no dealing. Unknown party. How to get it rectified? No, if there is a wrong credit note, then you have to. There is a. What I can say is that in case of any proceeding, you may have to establish that there is this is a wrong credit note, and there is a functionality on the GST portal which is basically communication between taxpayers. Maybe on that you can write a note and keep a record of that.
I think at this point, yes, we can, close this. Because, I think the questions which are coming are all specific issues people are asking with respect to their own, some returns or something, some other advices they're asking. So I suggest Sharendra ji, we can, can you close this
Yes, sir.
webinar with a final note?
Okay, sir. Thank you, sir. Thank you so much for a patient hearing. And I think the presentation and the recording will be available on the website of DGTS and CBIC. And I once again thank DGTS for giving me this opportunity, and I look forward to similar opportunities in the future. Thank you so much, sir. Thank you.
So I think it was indeed a fantastic experience for all of us. In such a short span of time, we have been enriched with all the information on important points to consider for closing of accounts with respect to GST, and credit goes to all the presenters as well as the participants without whom this webinar would not have been such a success. To conclude, a sincere thanks to Sri Amish Kumar Gupta sir for his time and input. Sir, your encouraging words are always a motivator for all of us. We are really enlightened with your knowledge and presence. On behalf of DGTS Delhi Zonal Unit and Kolkata Zonal Unit, I take this opportunity to propose vote of thanks to those who have directly and indirectly contributed to this webinar on important points to consider for closing of accounts with respect to GST organized by our department. Also, a thanks to Sri Bimal Jain for sharing his valuable experience, and a special thanks to Sri Tarun Kumar Gupta for his presentation and speech that made us understand the topic so lucidly and in such an easy manner that we all can appreciate. In the end, I would like to thank all the participants for their support and time in making this webinar such a success. Thanks to all.
Thank you, sir. Thank you so much. Thank you.
Okay, friends.